We finished 2019 with a competitive set of results for the fourth quarter. We demonstrated resilience and delivered good cash flow despite a year with tough macroeconomic headwinds. The strength of Shell's strategy and portfolio has enabled delivery of competitive cash flow performance in 2019, despite challenging macroeconomic conditions in refining and chemicals, as well as lower oil and gas prices. We generated $47 billion in cash flow from operations, excluding working capital movements, and we distributed over $25 billion in dividend and share buybacks to our shareholders. We remain committed to prudent capital discipline, supported by world-class project delivery, and we are looking to further strengthen our balance sheet while we continue with share buybacks. So, our intention to complete the $25 billion share buyback program is unchanged, but the pace remains subject to macro conditions and further debt reduction. We continue to make progress in our portfolio. So recently, we took a final investment decision on the second phase of the Malikai deepwater development. And in Trinidad and Tobago, we sanctioned Barracuda, which is a tieback backfill project for Atlantic LNG. In the last quarter, we continued to grow our power business by acquiring Hudson Energy, a UK electricity retailer, as well as Eolfi, a French floating wind developer. In Australia, we invested in the solar developer Esco Pacific. And in the US, our joint venture Mayflower Wind was selected to supply clean energy from offshore wind to customers in Massachusetts. Overall, we made significant progress with our power business in 2019. So today, we generate over 700 megawatts of clean power from wind and solar and directly supply electricity to homes, to businesses and to motorists. We also continued to grow our integrated gas business and sustained our upstream production. Across upstream and integrated gas, we sanctioned 8 and started up 12 major projects last year. We are on track to deliver an additional $5 billion of cash flow from these new projects in 2020. Now, let me take you through the fourth quarter's key numbers. $12.3 billion of cash flow from operations, excluding working capital movements. $5.4 billion of free cash flow. $2.9 billion of earnings on a current cost of supplies basis, excluding identified items. And all of this at an average oil price of $63 per barrel this quarter and downstream margins well below historical averages. Return on average capital employed was 6.9% and our gearing is now 29.3%. Our strategy is to deliver a world-class investment case, to thrive in the energy transition and to maintain a strong societal license to operate. And 2019 was a year of progress towards all three ambitions. Our priorities for 2020 are unchanged. We remain committed to capital discipline as we transform Shell into a simpler company that can deliver higher returns. Thank you.